Hey guys, hope you're doing good. Now we're going to talk about T-shaped accounts. So what are T-shaped accounts? So what happens is that when we make a journal, we it's still not organized enough for us, right? There's still a lot of information. It's everywhere. So we take all the common transactions. So if there was cash in three different transactions, we make an account for cash, right? So we do this for everything. So we can divide that into two types, two categories, okay? So first you have assets and expenses. So all the accounts for assets and expenses, and then you have accounts for liabilities and equity. Okay? So what we do is we make T-shaped accounts for them, okay? And again, T-shaped accounts are gonna have a debit side and a credit side, okay? Debit side and a credit side. For assets and expense, whenever you gain something, so for example, if there was a transaction like purchases to cash, okay? Or there was a transaction like cash to, or purchases debit, cash credit, or cash debit, capital credit, right? These transactions, we did them in the journal video, right? Let's say purchase was 100, cash is 100, over here it was 500, 500. So whenever we're spending cash, it's gonna come on the credit side, okay? So it's gonna be over here, 100, and we'll call it purchases. Whenever we're gaining cash, it's gonna be on the debit side, right? Capital 500. Okay, so this is what I made for a cash's account, right? So any assets or any expense, this rule can be applied for them. So whenever there's a gain in any of that, it would be on the debit side. Whenever there's a loss in any of that, it will be on the credit side, right? And so the first rule of accounting that I taught you guys was debit is equal to credit, correct? But over here, let's say this is all we did for the whole year. So capital was 500, purchases was 100. But is debit right now equal to credit? It's not, right? So over here, debit is 500 and credit is only 100, right? So we need to make them equal. And how can we make them equal? By adding 400, which is the difference. So 500 minus 100, which equals to 400. So we could add 400 on the credit side to make it equal to the debit side, right? And this is what we do at the end of each year. And this is what we call the closing balance. Hopefully that's clear. Now we're going to look at liabilities and equity. So for assets and expenses, we are sorted. This is what we've been doing till now. Now let's look at liabilities and equities. I'm going to make it a little bigger so it's easily visible to you guys over there. So let's look at this transaction over here, right? So over here, cash was coming into the business. So capital was credited, cash was debited, right? So let's say this is capital, of course, is part of the equity. So let's say this is capital's account, okay? So what's happening here? Capital is being credited, right? So we'll write cash and we'll write 500. So you see how when we started cash's account, we started on a debit side, right? Because it's a positive figure, right? But now that we started equity side, we started on the negative side. We started on the current side, right? So that is because all the liabilities and equities, they start with a negative balance, right? Because in a balance sheet, you have assets, right, on the credit side, on the debit side, and you have liabilities plus equities on the credit side, right? And we talked about how why equity is on the credit side, even though it is the shareholders' money. Company and shareholders are two different identities, right? So at one point of time, when the company dissolves or stop functioning, the company will have to pay back the money to their shareholders. So for the company, equity is still some sort of a liability. Hopefully that makes sense. So yeah, so basically all liabilities and equities, they start with a negative balance, okay? And when, let's say, in capital we withdrew some money, so let's say 200 was withdrawn, right? So this would just be bank or cash withdrawn, and let's say this is all we did for capital, okay? So now we have to balance it too, correct? So the credit side now is 500, and now the debit side is only 200, right? So again, we do the same thing. To balance it out, we would write closing balance 300, and then both sides would be 500. Okay, so you won't per se get a question on this. It's more or so just for your understanding. And if you have some problems with this, you can always come to me. I'm one text away. But overall, I would say like majorly just understand the concept of debit and credit. I do also highly not recommend using like the debtor, like whatever the rule, and then you have like a cheat code. I would rather say just understand what's happening, and that's way better. You can never go wrong with that. And yeah, so for assets and equity, it's always debit is positive, credit is negative. For credit, again, like I would still say that this is the minus side, this is the plus side for both. It's just that because liability and equity are something that you pay, the balance starts on the negative side, okay? So yeah, I heard someone got confused with that, so just making sure. So I hope we understand T-shaped accounts, and at the end of the year, you close the balance. And that is the same thing we do for income statement. Okay, great.